Hello everyone, this is the Cowboy and we are on April the 7th. It is Thursday and the last video of the week for the chart of the day. Today we'll do a little bit of a review and I'm trying to do this every week or every couple of weeks where we go back and take a look at some of the issues that we've looked at in previous videos. And today I think I have 4 or 5 of them that I want to kind of review, just to see, what went right, what went wrong, if the counts have changed in any way, how did Elliott Wave perform since last time we've looked at this, at the stocks. So I have here a list, and one of them will be, so the first one will be American Airlines. And I think even if you don't, let's say, follow stocks a lot, or, maybe you're more into crypto, these types of exercises are important because it gets you to continue to analyze your work, see what you've done, see what happened in the meantime. And it doesn't really matter what the issue is. It's a matter of, just analyzing the chart structure, right? It doesn't matter if it's American Airlines. It could be, one of the crypto coins. It could be one of the commodities, whatever it is. So we'll take a look at American Airlines. Then we'll take a look at AMC. Then we'll take a look at Lockheed Martin, LMT, which was the one that we've done a few weeks back. And then we'll take a look at the chart of oil. And then the last one we'll take a look at will be PLTR. And we'll kind of go through these to see kind of what it was. Now, American Airlines, you can see in here, I've posted up on YouTube, and it was on February 28th. So it's been a while since then. And this is where the price action was, and we were looking to see if, we're getting a completed Y wave. We were kind of measuring this W to an ABC, a triangle here in X wave formation, and we were scanning to see if this Y wave is complete. Maybe this was an impulse of these lows, and see if we can get a second wave and a continuation higher. And here's what happened in the meantime. So if you take a look at the American lines, this is the line. This is February 28th is when we looked at that stock, when I posted it up there. So what happened is our Y wave was back in here, right there. So we were looking at this as being an A, B, and then a possible C wave. Now we looked at this move and we kind of looked at it. Hey, it's an impulse. What is this? And maybe this is a pullback and you're going to be able to kind of go to the upside. Well, the markets did not work out that way and actually sold off lower and made a new low. And it came all the way back here towards almost $12 a share. Now, were we wrong in, looking at the market, through the eyes of a corrective structure? I don't think so. Maybe we were a little bit early in identifying that this wave Y was terminated. And even though there was no, not a lot of confirmation available yet, all we've had was basically an impulse here, right? So what do you do in situations like this? Well, you have to go back and adjust the count, obviously, because whatever you thought it was going to happen, it didn't. And I have to go back and watch the video in detail and just kind of see, what I was talking about and if there were any alternate that would allow for this move to continue lower. But you always have to be prepared that sometimes, if you place a Y wave in there, that might not be the end of it, right? Because until you actually overtake, let's say, this X wave, you got to allow for this move to continue to develop, right? That's pretty much kind of the place where this will get confirmed, or at least a break above this 1976, that this will get confirmed as a 3-wave decline into these lows, and then something else happens. So you never know for sure, but you're trying to put the odds in your favor. So American Airlines sold off, and I think it in my view right now, I think it finished a C-wave decline. This looks much, much sharper. I think what you're having in here is a flat formation here in a 3-wave, then an A, B, C to new lows, and then a 5-wave move up in B. And you have an A, B, and then down in C in a flat. And then you see a nice sharp rally out of here. And this is in 5 waves. Now, this is much better looking than this was back in here, right? Because you can see a 1, 2, 3, 4, and 5. So now what I think is going to happen, right? Even though you haven't taken this yet, so we still have to be cautious. But I think now you have more of a confirmation of buying American Airlines against the dips, because you have a correction here that seems to have completed back here near $12. You have an impulse that kind of tells you, I'm coming strongly off the lows and the next move should overtake these highs. 1, 2, 3, 4, 5, maybe what's going on right now is you're going to get an ABC here. and you're creating a break of this neckline, and then you break higher toward the top of this channel and push higher. So I'm going to scan on this one, maybe buy American Airlines when I see a little bit more of a completed, let's say, or a better looking ABC in here. I think we only sold off in the first initial decline of this correction, so just maybe just an A, B, and then down in C. So this is where we are. This is where we analyze. And listen, if you have taken along based on thinking that this was the low and a push higher, your stop had to be back in here, and you would have been stopped out and saved yourself a lot of aggravation. And then the market comes back and gives you another chance. So this is what happened in the American Airlines. We'll continue to kind of watch it. I still think this is a corrective structure here that should resume higher and break above that channel. Now, the next one on my list here, it is, let's see, it's AMC. So AMC, we were looking as an impulsive decline. We've had it as a 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, and 5, to complete a third, and then another 4 and another 5. So I did not give this, look in here, the ABC proportion. I didn't think it made sense at the time, just because it looked like this was not completed the way this was looking. So my primary interpretation was this is an impulse, so the downside that still needs to continue. Now AMC played a little bit of a trick here, and I'll show you this in a second. But remember, this was done on March 1st. So let's go back and take a look at where that was. So I'm going to go here and find it, AMC. So March 1st, where we've had this line, right? And at the moment, we've said that, we're going to get a fourth wave and then another decline in here, right? Which is kind of what happened. So I can actually move this now. I haven't touched it since then. And if you look back, you could see that this is where this, well, let's see in here. This was the third. So we looked at this as a wave 3 minor, just at a smaller degree or whatever is this. And let's kind of compare it with where we are right now. So that swing this third wave was back here. And then we were looking for a 4 and a 5, which could still be the case. So let's do this. So I'm going to go like that, because that's kind of how we've had it, 3. Right, and this was the fourth wave that we were looking for. So let's go back and check. So that kind of happened, fourth wave, right in there. So we did get, so we were, we were pretty, accurate in assuming that a fourth wave was at hand in that move, and then there should be another decline lower based on the way this pattern looked with this 1, 2, 1, 2, right? And that's kind of what happened. You've made a fifth wave low. Now that move was not, it wasn't as low as I projected it here, and I never really, look for targets for the fifth wave right away. I just kind of place the move, and then as the move develops, then I take a look at it, and then I see a little bit more in detail what that could be, because you can't really put this until you actually have a fourth wave finished. So, we finished this fourth wave somewhere up here at about, 1930 or something like that, and then you dropped in a very short fifth wave in there. So now I got to take this, move it back in there. So now you have what it looks as a completed sequence in here in 5 waves, and now you're working a fourth wave. And this is kind of what we were kind of thinking that is going to happen right here through this fourth wave formation. So that's at a larger degree of trend. Now what happened is you've gotten this in a very sharp rise in here, right? And it's I must say it could be pretty impulsive. Now, am I wrong? What if this is could this be a flat formation in a 335? All right, so let's just kind of look at the scenario for a while. Let's say that this was such a sharp move in there that this is a 3. I'm sorry, that's, let's see here, 3, 3, 5, and then this still works itself lower like that. So you're getting a fourth wave in there as part of a flat correction, and you go 1, 2, 3, ABC for 4, and then you're dropping down in this larger third wave, in this fifth wave, final 4 and 5. Or if some of these subdivisions are incorrect, at a larger degree, you're looking at the 3 in there, 4, and then for another fifth wave. Now what happens here is that this wave 4, you can see in here, it got into the territory of the wave 1, which is something that, it's obviously a rule breaking when you look at an impulse and say, well, this fourth wave cannot enter into the territory of the wave 1, better said, it cannot terminate into the territory of the wave 1. So no matter how you look at it, even on the third wave being, let's say here, or if you want to place it below, like that, you know, this could be maybe part of a triangle. So this is how this would happen. So let's say that this one went in there as a wave A, and then you're getting a B, C, D, and E. And by the time you're done with this fourth wave, you're below this wave 1 low. And this is a discussion I have all the time with my members too, and then people that ask me questions. You know, it is okay for the first wave A of a triangle to get into the territory of the wave 1. It is not okay for wave E of a triangle to terminate above it. So this structure could continue to unfold as such, where you go in a triangle and then a push lower. So, you know, I'm watching both of these. I'm watching all of this kind of unfold in here. I think this rally in here was way too sharp. I don't think the structure is complete. I still think that AMC will eventually trend lower, and this was, you know, a fool's rally to the upside back here towards $32. Now, another way that this could be is that if this is now, because of this structure here, maybe it's an X wave and it's a correction, and you're looking at this as an ABC, and you know, then creates a WXY, a combination move. So you go down here, let's say a W up in X, and then you do another Y wave decline, and you start to do something like that, right? So you go A, triangle B in there. So this is how that would look. You know, let's say you come down in A, and then you have a triangle in B, and then down in C. Or wave C, it's back here, right? And then you have a wax X wave, maybe you're doing one more push towards the B wave, something like that. You know, right in there. So you go an ABCX, and then you kind of come back lower in another Y wave. And this is, let's say this is a triangle, A, B, C, D, and E in there, you know, with the E wave just kind of quickly going above the D wave. That happens sometimes. So something like that. And then you go in the B wave right up at that high. So A, B, C, D, and E, and then you drop down, and you have a 1, 2, 3, 4, and 5, and maybe that's the move, right? Now, if I'm counting this as an ABC, that means that I could also count this as a, let me put this back up here towards the highs, like that. That could mean that, you know, let's say this was a wave W, this was a wave X, and then you're pushing higher, right? And this could be, let's say, a wave 1, and a wave 2, and then you're going to go 3, 4, and 5, right? If this is something that, you know, you have confidence for whatever reason in AMC, this could continue to push up that way. But because, you know, this is a market that is, you know, a little bit tricky. It's got, I think, a lot of kind of meme stock feel to it, obviously, because people are trading it, and you're getting all these kind of short squeezes. It's not a very strong fundamental company, so I don't see a reason why this would really climb like that. There isn't really that they're losing money like left and right. But, you know, I would definitely pay attention to this X wave, to this B wave highs, because above those levels, things could start to look interesting for the upside. Until then, I'm still going to look at this as somewhat of a correction, of a corrective move. And I'll come back and kind of fix this back in the fourth wave idea, you know, to maybe take a look again at this in maybe in a couple of months and kind of see where we are. And I'll play some alternate counts with WXY to kind of remind us of what we're thinking. So I'm going to save this up here and then go and take a look at the next issue that we have. And this one, it is Lockheed Martin. So Lockheed Martin, we looked at it back in March 2nd. So just a day, I think, after we looked at AMC, and we looked at it as an impulse, a triangle in here. I mean, you can look as we're discussing the larger structure, you know, in a larger time frame, this being a fourth wave and doing some kind of a fifth wave higher. And, you know, actually this was fifth, and then 3 in the primary, finished 4 primary with the 5-way primary in progress. So A, B, C, D, E for a triangle right in there. Then 1, 2, 1, 2, that gives you the third of a third move, 4, and then a final kind of push higher, a very strong fifth wave into this larger, let's say, what is this, intermediate wave 3 with the wave 5, then 4 and 5. So let's see what happened. Let's go and take a look at Lockheed Martin. And here is Lockheed Martin. And the last time we looked at it was exactly where this line was, where the push was just kind of getting super crazy. And this was a signal for me that, hey, you know, this is getting, you know, way too fast, way too quick. It looks like a fifth wave that's breaking out of consolidation in here already. A third wave kind of happened back here. So it's got to be something that's terminal in this sequence. And sure enough, you know, not soon after that, you maybe made one more quick high in here, and then you're starting to fall apart into this, what it looks to be maybe a triangle formation in this fourth wave. So this one, it worked out. It's pretty a simple structure. I still think you're probably going to get a triangle in here, something that looks like that. Could be maybe A, B, C, maybe a small, not an E, and then one more push higher, and then we should correct a little bit more, or maybe more than just a small correction. Maybe this thing can come all the way back towards $400 or $350 or something like that. We'll see. But I'm continuing to monitor it. I'm going to save it up here. I think we're still basically on track for this proposed count. But this tells you that, if you've seen such a strong move in here, that you kind of have to take some profits. You gotta realize how the structure looks, and then maybe you want to trim off your position, because you're probably going to go sideways here for a few weeks or months, and then maybe get one more push higher. Sometimes you don't get it. Sometimes, it's a truncated fifth, and then, this becomes very, very small, and you're thinking this is still going to go, but all you're going to get is that, and then you're going to crash lower. So that's why I don't really want to overstay my welcome in some of the stocks that have already made the chunk of their moves. And I'm going to get a sip of coffee here. My throat is getting dry. All right, so LMT, the next one on my list, and it's hopefully the video is not going to get too long. So this is kind of what we had in mind. And then the next one here is oil. So oil should be pretty easy as well, because we identify a large correction, below zero on the COVID crash. And then you have a 1, 2, 3, 4, and 5. And we were looking at this high level in here of resistance as a level that is probably not going to be able to get penetrated too much, or if it does, it's probably not going to be, long lasting. And I think the oil market went up to 130, just a little bit above there, and then it started to roll over. So just because you're not hitting your targets precisely, where you place your fifth wave, it doesn't mean that, you're wrong on the approach. You have to be flexible a little bit on the market and just let it breathe and let it squeeze, as high as it actually wants, but keep an eye on it, because, there are signals here that tell you that the shape and the rise of this move, it's more indicative of a fifth wave type action and not of a third wave type action. And when you're thinking of fifth wave, especially in commodities, when they get a little bit stronger, you got to be on the lookout for a reversal. So then if I take a look at the oil market here under my mix, data here, then that's your 1, 2, 3, 4, and then up in 5. And we looked at this exactly, when it was in March 2nd, I think it was, and it was right near the highs when we kind of started this issue. So since then, oil market kind of crashed lower, almost 27%, and now it's doing some kind of a consolidation. But I think this is, I don't think it's going to have enough power to continue to push higher. You might argue and say 1, 2, 3, 4, and 5. I don't think so. I think this was the fourth, and this was a final fifth. And what's going to happen now is probably, even if you're going to push higher like that, you're probably going to fall back or begin a much larger type correction, into something of this nature onto the market. So, I'm not super excited anymore about longs in oil. I was excited for a long time, in the energy plays and all that. And I think a lot of them have already kind of run too much too fast, and they're about to correct the commodities markets as well. But we'll see. So for right now, I'm expecting a continuous correction in here. Maybe this was a wave A again, and this is a B, and then we're going to get a C wave. Then you're going to go back up, and then maybe, do something like that. So that's the oil market approach. Not really a lot to discuss. We kind of nailed where this fifth wave top was going to come. I was shorting this market maybe a little bit earlier than I should have, but I finally kind of caught it, and we've enjoyed some downside there. So, that's the oil. And then the next one that I have, and just kind of let me show you on the larger picture here really, really quickly on the one, let me go, maybe that's too much. So this is where that resistance was, right in there, right? I mean, it was clearly, they weren't going to be able to, take this market like so quickly and so fast when you had, such a big area of supply that's going to hit the market with fresh orders. And, sometimes you get a spike, you get some stops, or you get people excited and that are going to think it's going to go to 200 right away. And you're pulling back. So anyway, that's oil. And then let's go back to my last issue in here. That is PLTR. So PLTR was another one that we studied back on March 7th. And this was an A-wave decline. So we looked at this as a 1, 2, 3 triangle, 4 down in 5, 4, and 8. Then a nice 3-wave setback in B towards the 6, 1, 8. Then a 1, 2 sell-off in a large third wave, followed by a fourth and a fifth. And at the time, March 7th, we were looking to see if PLTR can start to stage a correction. And you know, we had a little bit of an impulse off the lows. I think there were some serious divergences here between 3 and 5. And it gave us some clues that this market, it's not unreasonable to expect that it should get us a rally back in there. And if you look at the PLTR, let me go back to my stock data, and there it is. And here is where we are, right? So this is kind of where we looked at it. This was, again, around March 7th. And that final fifth wave remained as we thought it would. And we never made new lows. This was a terminal move. So, I mean, the pattern was very, very clean in here. And, you had a kind of a three-way setback against that move. You can see it in there in ABC. And now you're trying to do a little bit of a rally. Now, you know, what's next in here? You can do a 1, 2. You can do another 1, 2, and then rally higher and then just get a stronger approach. Or, if for whatever reason, let's say we were wrong, this is still another fourth wave, you're going to crash lower in another 5. Because if this fourth wave actually moves back here, right, and my subdivision here, it's actually a 1, short 2, 3, 4, and 5, then I still got to allow for a 4 and a 5 to move lower, right? So there are tradable moves that you can take into the market when you see patterns like this. Obviously, if you're a trader, you got to be careful here and just say, well, I think I took some of the gains. If I'm going to get a triangle in fourth here and a small fifth, then I'm getting more of a confirmation of a low. And if I overtake this highs, that's a good thing. But if this market starts to fall apart and start to attack this wave 1 high, then I know this is more than likely a 3-wave correction and not an impulse. And if I break below these levels, then I know I'm in another sequence in here, which for believe it or not, it's probably going to be a 5th wave again. And then you have another opportunity to long this again, even better. So, just got to stay nimble and just listen to the market and find out as the price action develops, what degree of confidence you have that this move, it's impulsive, and continue to look for the data and keep confidence in this count, or not keep confidence and say, well, we're broken some key levels in here, and this market is going to probably do one more break low. And at least that prepares you. And these moves are not unexpected or inexplicable at the moment you understand, how Elliott Wave moves, and then, what could be in stock. Because you go on CNBC and you hear, oh my goodness, PLTR is, 7% down on a day, and, and it's like, why and how? Well, take a look at the structures here, and why are you rallying? You're rallying because, you've had an oversold condition. You've had what it seems to be a 5-wave decline in here. And, we know that those waves are terminal waves where people give up, or people, get margin calls and they sell and they panic, and, and that's a 5th wave price action. And you got to be aware of that in your own trading as well, because those sentiments will hunt all of us all the time. And if you recognize them, then, you might be able to handle some of those sell-offs a little bit better. So anyway, I think this kind of covered everything I wanted to say. And guys, listen, please subscribe and like. Take 2 seconds of your time and just hit that like button. Hit that subscribe button as well. The bell, the notification, and, share it across the media and with your friends. And that's all I have to say. So thanks for watching, sticking with me in here. This is Thursday. I'm going to see you all back on Monday. On Saturday, I will have, I think, Bitcoin and Ethereum Elliott Wave analysis that we do every couple of weeks. And I'm just going to throw a plug in here. Come out and visit us in the pro room. Give us a try. See how you like it, what we do in there. And visit us to learn more Elliott Wave, more psychology of trading, more markets, more macro, all kind of stuff that we discussed there. So talk to you soon. Bye-bye.